Trades family. Hope everybody's doing well. Oh, we've got our FOMC today, finally. Let's dig right in. Come on. We're waiting for that chart to update. One thing to note, in review, yesterday we ran into our key level and sold off back down to our key levels at 38.55. That 4 hour 45 EMA sitting right at that 38.40, right near our key level, 38.43. And we can see that yesterday we were running into the top of an hourly squeeze. And that's usually where we load short to at least go halfway, if not the whole way, to the bottom of that squeeze. We did fall back and fill the gap, and then basically just sat in a very choppy range, right in between our key levels. You can see we're about to be opening in the same range. Basically looking to hold these key levels. We also have the daily 8 sitting at 38.41, the daily 50 sitting at 38.35. We do have our, let's see, 30-minute squeeze in place, also an hourly that's starting to form. And there's your hourly, nice and tight. Going to be opening near the bottom of it. So let's see if we can just hold 38.55 at open. We could start to get that bounce up to the top of the squeeze to try to push higher. If we do start to give out that 38.55 and yesterday's lows, likely coming right down to this 38.43 and these two daily moving averages. Should that give out, we are talking back to 38.07, 3800, where the daily 21 sits. But if we can hold up above these daily 8 and daily 50 and hold this range, we are setting up for a decent bounce to try to get back up and keep pushing higher, right? We have to see how FOMC goes today. There have totally been FOMC days where we, start a slow grind up into FOMC. They release numbers, we have some dramatic candles, and maybe get some continuation. So we'll have to see. But I like how our moving averages are stacked. The 8 is getting over the 50. So we have a bunch of support sitting right below us, even if we do slip below yesterday's low. We've got a bunch of support here to bounce us. Can we take it out and go lower? Absolutely, but the longer we hold above these items, the more likely it is that buyers will step in and try to push us back up. Let's move on to NQ. And we're virtually opening flat. YM down, a little bit more, but every other index is just a couple of bucks red. And by the time we open, they might be a couple of bucks green. NQ fell back to the daily 21 and the daily 8 and got below them yesterday, kind of resisting them. Overnight, just kind of chopped around at them. And now we have the same hourly squeeze that's very tight with the daily 15 just below that. Should we start to give out yesterday's low and the daily 15 and fire this hourly squeeze down, then it's back to 11,200 and psych level of 11,000 where that first Keltner sits. So we got a couple of key levels here. But if we can hold up to this 11,300 to 80 where the daily 15 sits, get back through the daily 21 and daily 8, then we're looking to get back to 11,500 and carry back up to that daily 50, which is right near our key level at 11,677. We've got some downside targets, some upside targets, and we'll use this hourly squeeze as our guide. If we hold the bottom, we're going to go long to try to take out the top. If we keep rejecting the top and start to slip back down, we'll go short to the bottom, playing that range until it breaks down or breaks up. Ready. Overall, the ruddy was pretty decent yesterday. It stayed positive most of the day. You know, it closed over here, let's say about 1851, and that was kind of the lows on ruddy yesterday. So let's see if we can continue to hold at those lows and at these squeeze bottoms on ruddy and start to bounce up. If she starts to break down below this hourly squeeze, which is around, call it 1845. If we start to break below that and reject, then we're coming back to 1836 and 1825 where the daily 8 sits. It's also kind of where we were topping out last week before breaking higher, so it'd kind of be retesting some of those highs. But if we can hold that 1850, start to work our way up, get through 1870, the goal is to get to this daily 200 at 1880 and to get to this 1900 big key psych level for upside targets. On YM doing a great job of holding up above the daily 200, this yellow line. Fell to it and held it yesterday and fought back to view up and still above it this morning. So, same thesis, if we can hold the squeeze bottom and that daily 200, looking to catch a bounce back up through the top of the squeeze to get to 33,000 for a test. And if we can trek higher up to 33,200, 33,300. Obviously having to take out yesterday's pre-market high. If we start to lose this daily 200 and 32,500, let's call it, which is pretty close to yesterday's low, pretty much yesterday's low. So if we start to lose that on YM, then we are talking about coming back to this daily 8 at 32,230. Which again aligns with some of the highs where we were topping out last week before that big Friday push. So let's see if we can hold up at this 200, start to push higher. If we give that out, retesting some of those highs from Wednesday and Thursday. And if we catch a bounce there, still looking good, but we start taking those out, then we're talking about, you know, kind of retracing some of last week and back to these key levels below. Apple was definitely a leader to the downside yesterday. It kind of started breaking down while the market was still holding up for about the first 15 minutes. And then the market joined in, and Apple fell right back to this daily 50, daily 8, where it held right in between those. Slipping a little lower pre-market, and we're back at these key levels. We have the daily 21 sitting right at about 148. So let's see if on Apple we can stay above 148, start to push off of this zone that we're arriving back at, and start to try to recover back up to the daily 8, daily 50. And you know, just looking at our moving averages, there we go. We made it to the daily 200 on Friday, and now we're starting to work our way back to the other moving averages below. Very common when they're stacked, right? We're stacked on our moving averages from about 144 up to about 157, right? So we get up to the top, coming back to retest, looking for a bounce in some of those. Otherwise, we're talking about heading back down lower again. making it to all of our moving averages. We want to see us stay in between them and then try to head higher. If we go from in between them to breaking lower, then that could spell, something bigger on the market, where we've fought back to moving averages and rejecting for to head back to lows, right? Just talking big picture on Apple, and not necessarily saying it happens this week, but that's just kind of how it works when we have our moving averages all stacked together like that. We have the 21 down here at this 148. We have the daily 8 at 150, the daily 50 at 151, and that daily 200 back up at 156. So let's see if we can hold our zone here, start to work our way back above 151. If we can get back above 151 today and see a good push on the market, this was a very quick drop, so just meaning there might be a thin structure in there, a lot of single print type action, where once we break above 151 and hold it, we could accelerate right back to our zone above. Now let's see what they want to do with Apple. Yeah, it would make sense to try to hold the 21 today and bounce. AMD reported last night. Had a little dip, but held above 56. Earnings, were not all that bad, really. They were pretty decent. There were a number of beats. Obviously, some not the best guidance, but we kind of already expected that. They announced it a few weeks ago. So AMD pushing up a little bit higher, getting above the daily 21 now, as we were resisting the daily 21 repeatedly. Now we are above it. Let's see if they have a little profit taking to test it from above, but overall looking strong. Upside targets getting back to 65.5 and 70 where the daily 50 sits. But could be a day for chips and tech. Amazon dropped down yesterday back to this 96. These are the key levels that I'm watching on Amazon. We can hold 96. We can try to work our way back up to that 100, 101, 104. If we start to lose 96, coming back down to 90, or well, 91 pretty much, right? BA. Sorry, I'm seeing in YouTube chat the sound's a little low. Can you guys hear me a little better now? Well, either way. Let me just reposition my mic and everything, because I might be kind of looking off to the side of my mic instead of looking straight at it. So hopefully that's a little better on BA. Definitely want to draw little trend lines here as we are gradually heading up. If we start to lose this trend line, then we're falling back to 140, 138.5, where the daily 21, daily 15 sit. But if we can hold that trend line, looking for BA to keep pushing higher through 145, get up to 148, and try to fight back to 150. And, overall, did not drop too hard yesterday, so it was mostly big tech leading us down. Let's see if BA wants to try to lead a little bit today to the upside. And we've got our trend line to help keep us aware. I'm going to create an alert from that. If we cross below that trend line, I want to know about it. Cat. Just remaining strong, staying up near this 220. Same kind of thing. You could draw a little bit of a trend line, and if we start to break down, coming back to 212, 206, if we can continue to hold above 215, We can keep trucking through 220 to get to 225, but we are past third Keltner, so a little bit overbought after that earnings move up. Coin. Ooh, they sold a coin off hard from its daily moving averages. So like this is what I was talking about on ES. Coming back to moving averages and testing all of them is fine and healthy and a good move. But once we start to reject those moving averages, we can see a hard push away from them. We're getting back to our key level here. Coin does report tomorrow after the bell. So let's see if we can, or if they just want to let it drift to that 62, maybe to 60 in this big daily squeeze bottom before earnings report, which will, you know, if it goes well, shoot us right back to our moving averages. Let's see, Google. It may be a little hard to see, but I do have a little shaded zone here from 91 to 92 that we worked off of last Friday to my next shaded zone from 95 to 96. And you can see we fell back and then rejected out of it, right back to the other shaded region. Have a key level here at 89.5, 89. If we do keep slipping below 90, looking for a bounce there, with the goal of getting back to 92, 93.5, 95 above. But if we lose that little zone at 89, then it's down to 84.7 up to 86 is my next little zone of support, where that third Keltner sits. GS, still remaining strong and pumping higher. When this thing starts to give out, then, you know, we're definitely going to be looking at a bigger pullback on the market. Let's just see for fun. Oh, come on. There, I just had it. There it is. Creating a little alert. So whenever this starts to give out on GS and pull back, then we're talking about a reversion to the mean on the market, even though we're kind of already at the mean. But it could spell a move away from the mean and those stacked EMAs on some of the indices when finance starts to have some profit taking and come back to retest its moving averages. So on GS today, on any pullbacks, want to see it stay above 345. Yesterday's low around 343-ish, with the goal of getting to that 350, maybe up to that 355, but we are near third Keltner. Same will be true for JPM, still on that steady trend at the third Keltner and almost at target of that psych level of 130. If we start to roll back over, then coming back to 125.5 where that daily 200 sits, 124 where the daily 8 sits. Meta. Me personally, I'm not touching Meta. I advise that you don't, that you do the same. It's going to dump when the market's dumping. It's going to do erratic stuff like yesterday. It basically sat while the market dumped, tried to have a little bounce, and then came right back. I have very little interest in trading Meta. That should tell you something. Again, if it can get going to the upside, has to get above 100 before I even start to really pay attention to it. And if it keeps slipping, 90 is the next target. Basically going to mess around between 90 and 100 before finally waking up to the upside. Microsoft. Slip down to this first Keltner to the downside. Basically going to be opening right near it with that Keltner pretty much in the middle of the squeeze. Let's see if we can hold yesterday's low, overnight low, around that 227. Try to bounce ourselves up to 230, 232. Upside targets to get back to our moving averages above. But if we start to lose that 227, talking about 225, 222.5 as the targets below. Netflix. Still slipping back a little bit to moving averages, like 285. I've talked about how, it had that good gap up on earnings. It's been grinding up its third Keltner and moving through this big gap fill shaded zone. Not surprised to see it get right near the key level and then start a slow fade back to moving averages. That allows the third Keltner to move up more and more. It allows our other moving averages to move up a little bit each day. If we start to lose this daily 8 and this 285, 280, next stop, and if that gives out, we're talking back to these moving averages below and where we took off from after that earnings report. So let's see if we can hold 285, start to make its way back to 300, 305, 310. And if it gives out that 285, going to 280, back to 270. Nvidia. Having a little gap up with sympathy with AMD. Let's see if they want to rotate into chips today. Upside target for Nvidia getting through 138 and back to 140, which we haven't been at in a while. We've been resisting as each time we get close to 139. So those are your upside targets at the top of these squeezes, and if they can push through up to 142 where that next Keltner sits. But if we reject and come back down, we're going to test that 134.9. If that gives out, back to 133.5 where the daily 50 is, 132 where the daily 8 is, and 130 at the bottom of this 4-hour squeeze. Now let's see if they want to rotate into chips and get this over 140 finally. QQQ. Well, as we talked about, NQ is a little weak yesterday. We do have our daily 15 that's going to be coming in. Probably about 273.5 right underneath the squeeze bottom. See if we can hold that daily 15. Start to make our way back through 276 where the daily 8 and daily 21 sit. And if we can fire the squeeze to the upside, looking to get back to 280. Never quite made it to that daily 50, up near 285. As every time we've gotten above 280, we gap below it. Can't get to it. When we gap above it, we dump right back. So let's see if our moving averages can hold us up and send us back. If we start to lose that daily 15, then we're talking back to Friday and Thursday's lows, and that first Keltner to the downside, back to 270, 268. Got to be prepared for anything, depending on what we get on FOMC today. We could start a move down, we could break back up. The last FOMC, I think, didn't really even give us much. It kind of dropped a little, it kind of popped a little, and then it fizzled out into close. So, SPX. Basically going to be opening just a few bucks split down. So it'll be close, not right at yesterday's lows, but it'll be kind of close. We did have a squeeze going into close that will still be intact. And we have the daily 8, daily 8 is the blue line, daily 50 just below us at about that 38.25. Got that key 38.15. Basically took off from about there on Friday. So we've got some levels right below us if we do start to slip below yesterday's lows. If we can hold and start to make our way back up, looking to get back to back above that 3870, 3880, and try to work our way back to 3900. And if we start to give out that 3815, talking back to 3800 and 3780 where the daily 21 sits, 3750 where the daily 15 sits. SPY. Yeah, we've got our big key level here at 381.5. And you know, we were being held down by this trend line that we gapped over, came back and kind of bounced at it. Just like, you know, when we're down on a 1 minute and we're in a wedge, plenty of times we start to pop out of it, retest it, and then keep going. So let's just see if maybe yesterday was good enough to retest this and push higher. Use our squeezes as a little guide there. You know, if we slip this squeeze a little bit down to our shaded zone in this 381.5, where our daily 50 and daily 8 sit, that's still fine. Could catch a bounce. If we can bounce, you know, either there or at our squeeze bottom, looking to get back above 386 and make our way to 388.5, 390. Should we give out this zone around 381.5, 380, then we're talking back to 376, 377 where the daily 21 sits, 374 where the daily 15 sits. Square reports tomorrow as well after the bell. So let's see if it can hold its 4-hour squeeze bottom and this daily 15 around 57. And if earnings go well, you know, back to the daily 50 and trying to push higher. If they go not so well, then we're headed right back to at 55, 52.5, and maybe even down to 50 at the bottom of this daily squeeze. Tesla. Let's see, gapped up to this 233 and pushed up to the extent of this 4-hour squeeze top, just to slip right on back out of it. Let's see, today, if we start to lose this 30-minute squeeze that we have going into open around 226, likely coming back to this 4-hour, 2-hour squeeze at 223.5. We also have our daily 8, which is caught up to about 224.5. Should we start to give that out, then it's down into the 4-hour squeeze and back to 216, 218. But if we can hold up at 223 or 226 and start to catch a bounce, it's you know, mission to get back through 230, 233, and maybe even start to push to that high up there. But we've got a range and a thick 4-hour squeeze. You know, to fire the squeeze, that we have to keep pushing against it to get it to open up and get thinner and then fire. Same if we're going to fire to the downside. We have to push against it, open it up. So this could be the range that Tesla is stuck in for, you know, for the next few days until we start to push against one end and open it up and fire. UVXY, steady down. You know, if we start to pop and kind of break this trend line that has been bringing us down, just go ahead and draw it in here a little bit. It's a little sharper than I wanted. So let me connect it more like there. There we go. If we start to break through this trend line and fire the squeeze to the upside, UVXY will make a push to try to get back to 10, 10.25, 10.5. That would spell more downside for the market. But if we can stay below this trend line and just keep edging lower to 9.5, 9.25, 9, then we can see some upside and bouncing on the market. VIX. You know, VIX was kind of weak yesterday. I mean, we had the drop in the market, and VIX only went up about like 50 cents and then just came right back and stayed. Having a little gap up. And I think that gap will be taking us through this trend line or be really close to it. So I'm going to keep an eye out on that on VIX. If we're going to see some more downside in the market with this gap down, and if you know, the reaction to FOMC, then we'll likely see VIX get back to 26.5 up to 27, you know, 26.5, 26.6 where the daily 200 sits, up to 27 where the daily 8 sits, and maybe even keep pushing 27.5, 28 where the daily 50 sits. So we want to keep an eye on VIX because it could start to curl back up and go to revisit its moving averages, which would spell more downside for the market and rolling back below its moving averages. But if VIX can stay below that daily 200 at about 26.5, get back below 26 and start the journey down to 25.5, 25, then we can see some good upside in the market. We are kind of, yeah, we do have third Keltner further below. So we do have room for VIX to keep going down before it gets to that, you know, oversold third Keltner. But after getting through all those moving averages, we'll have to see if VIX is ready to have a little pop back up to them before trying to complete a journey to something like a third Keltner. That's it today, or that's it for prep today. Thanks for tuning in. We're continuing on with our free week in our room where you can test out our tools and trade alongside with us. Sorry, yesterday the stream kind of disconnected and aired out, but going to try something a little different today that hopefully we shouldn't have that issue and maybe have a little bit better video quality as well. So, thanks for tuning in, and we'll see everybody in the chat today, and I'll be dropping a link soon for streaming live, whether it's me or Richie or whatever. So good luck today, and we'll see you in the room.